Hello, it's Big Cheds, and this is the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. You can find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about hidden divergence. You're probably familiar with regular divergence, but here's a quick overview of what hidden divergence is. You can pause and read this on your own time, but regular divergence, or in this case, classic divergence, is a reversal divergence where the price makes a lower low, oscillator makes a higher low. For example, with something like the on-balance volume, which measures accumulation and distribution. Simply put, where you have an increase in accumulation, but the price is going lower, this divergence hints at a reversal. Hidden divergence is continuation divergence, which essentially means there is the oscillator doing something that the price is not doing. And what the oscillator is doing is hinting that the trend will continue. This works quite well with RSI. So for example, if the RSI is making a lower low, but the price is making a higher low, you have the RSI cooling off. And while the price retains the gains, essentially you can now make another leg up because the RSI is cooled off. That's a hidden divergence. So here's an example of that. This is from a tweet back in April. And I pointed out here, Bitcoin 4H local throwbacks. We know that means local, meaning nearby. 4H 4 hour. Volume reflects accumulation. RSI hidden bull divergence. So what is the hidden bull divergence? Well, if you take the price and you go from a candle body closing basis, what you can see is the RSI has cooled off with a lower low while the price has made a higher low. And that essentially shows you in this consolidation range, while the price has rebalanced some of that short-term supply and demand, the RSI has gone lower, the price has gone higher, and you now have room to run. That's a hidden divergence. Now, you wouldn't want to do this with the on-balance volume. It is never a good thing for the on-balance volume to be making a lower low and the price to be making a higher low, because that doesn't make sense intuitively. You wouldn't want to have distribution while the price is going up. That's a bad thing. That's not going to be continuation, right? It would make sense, however, for the RSI to be cooling off while the price goes up. That's a continuation divergence. So in general, a bounded or a banded oscillator like an RSI works really well for hidden divergence, and something like accumulation, distribution, or the on-balance volume works better for regular divergence. So again, here's a chart. You can see what the difference is, classic versus hidden. Classic is reversal. Hidden is continuation divergence. And this is part of the Trading Encyclopedia Daily Education series on my YouTube at Cheds Trading. You can find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. Thank you, folks. I will talk to you soon. Big Cheds out.